Okay, well, I think to be respectful of people's time, I think we should start. Thank you all for coming and joining. Please welcome Katie Shelton, the Senior Manager of Market Engagement of the Connecticut Green Bank. She's here to talk about the opportunities and advantages of the Solar Marketplace Assistance Program and the Solar MAP program for affordable multifamily providers. I think it's a program that's been around for a while, but it's now going to have a specific focus on affordable multifamily, which is our group. Everybody who's on, we'll follow the normal protocols. If you could mute yourselves while Katie's speaking, that would be great. If you have a burning question that just can't wait, raise your hands in the chat. I'll see you and then recognize you. Katie said she'll take questions as she goes. And then when we get to the end, we'll open it up for more free-for-all questions. Raising hands is requested but not required. So if you want to talk, you can just jump in. So with that, I will mute myself and turn it over to Katie to get started. Thank you, Katie.
Thank you. All right. So good morning, everyone. Thank you for allowing us to participate this morning. I think some of you may be familiar with my colleague, Rudy Stark, who has traditionally joined these meetings. I'm not sure if he's going to be hopping on today, but appreciate you welcoming me to the group nonetheless. Today, we're going to be chatting about the Solar MAP Affordable Multifamily Housing Program, which, as Dean alluded to, is a program that has been in existence for a few years now, but has just recently been expanded to include affordable multifamily housing projects due to a recent legislative change specific to solar for affordable housing that I want to chat about today. So by way of an introduction, my name is Katie Shelton. I do serve as the Senior Manager of Market Engagement for the Connecticut Green Bank. The other two members of our team are Emily Basham, who's the Associate Director of Financing Programs, as well as Nikki Dow, our Solar Project Manager. They are both unable to attend today, but wanted to make a brief introduction. In the event there is interest in learning more about our program, they would ultimately be involved in the process. So for anybody that's unfamiliar, the Connecticut Green Bank is a quasi-state agency established in 2011 with the goal of accelerating the green economy here in the state. Our stated mission is to confront climate change by increasing and accelerating investment into Connecticut's green economy to create more resilient, healthier, and equitable communities. Aligning with that mission is equity investing, which is one of our top goals, investing in vulnerable communities that are disproportionately harmed by climate change. It's probably no shock to anybody on the call, but Connecticut has very high utility costs, including a source here from the Hartford Business Journal from February of 2024, which references a recent study that was completed ranking utility expenses across the U.S. Connecticut specifically comes in ranked number 4 as the most expensive electricity in the U.S. So obviously a pretty heavy burden here for the residents of our state, but it does disproportionately impact vulnerable communities, which is what we look to address. Solar is obviously a great way to reduce this burden, but affordable multifamily housing projects have traditionally been an underserved market in regards to solar. A few reasons that contribute to that, specifically how projects have traditionally been developed has been by utilizing the commercial solar incentive program here in the state. For anybody that's previously worked on a solar project for affordable housing, you may be familiar with the acronyms LREC, ZREC, which was the program that was in place a few years back. New commercial incentive program that's currently in place, we're in year 3 of, is called the NRES program. Again, it is a commercial solar incentive. The problem with the way that it was previously utilized for affordable multifamily housing projects is that projects were typically designed to tie into a common area meter only. The financial benefit of those solar projects did not necessarily trickle down to the residents of the facility. In addition to that, the structure of the commercial incentive program limited solar development for affordable housing because it is a competitive solicitation with only 1 to 2 times per year where you could submit for and secure a utility incentive for a project. In addition to that, there was capped capacity in those programs, which limited the number of projects that received an award on an annual basis. Because of that, we received feedback from those submitting for projects that it generally took multiple submissions into the utility incentive program to receive a utility award, which made these projects pretty arduous to develop and extended the timeframes for development across the board. So to address that, there's been a recent legislative change that has come about that is now treating affordable multifamily housing solar projects as solar projects under the residential solar incentive here in the state. The definition of a residential customer was expanded to include affordable multifamily housing projects. This was through an interagency design, which is of note through DEEP, DOH, Connecticut Green Bank, CHAFA, and HUD. Won't make you read that long definition to cut it a bit shorter here. The definition of what is affordable as far as the program rules are required is not less than 60% of the units of the multifamily dwelling being occupied by persons or families with income that is not more than 60% of the area median income. There's 4 different ways that a project could potentially qualify to participate as a affordable multifamily housing project under the residential solar incentive. Tier 1 and Tier 2 are most common for what we see, with most projects falling on the Tier 1 designation, which is properties that participate in the low-income housing tax credit program, or property containing a majority of households earning 80% or less of the area median income. Most of the CHAFA and DOH administered programs would be encompassed under the Tier 1 designation. On the bottom right-hand side of the screen, you can see a breakdown of the Tier 1 eligible properties by number of units and number of properties that are included on that list. It's just over 1,300 total sites that would be eligible to participate under the Tier 1 designation. Tier 2 is 66% of residents that have a household income at or below 60% of the state median income. We've also got a Tier 3 designation, which would be any sites not encompassed under Tier 1 or Tier 2. And then, of course, we've also got naturally occurring affordable housing, or NOAA, that would also potentially qualify to participate in the program. So why is this a big deal? In a nutshell, by participating in the residential solar incentive, it creates vast opportunity for solar deployment for affordable multifamily housing projects. Specifically, looking just at the utility incentive itself, the value is substantially more lucrative than you're able to secure in the alternate commercial program, which was the only way that projects were previously developed. To compare apples to apples, it's about 37.39 cents per kilowatt hour, which is the value in the RES, or the residential solar incentive. In comparison, the incentive in the commercial program is about 20 cents a kilowatt hour. So it's almost double, making these projects substantially more lucrative to develop. In addition to that, there's no cap on the number of tariff projects that would be awarded on an annual basis. Applications are received on a rolling basis. We're not limited to that 1 to 2 times per year where we can submit for and secure an incentive. And lastly, and probably most importantly, is that we're now able to develop a project which would benefit common area meters as well as the residents of the facility. So as I've alluded to, it is a program requirement that the financial benefit of the project be shared with the residents of a site. PURA has determined that threshold to be 20% of the state level incentive that needs to be shared amongst the residents of a facility. For sites that are individually metered, it is a really simple process where the monetary credits will be virtually allocated to the tenant's utility bills on a monthly basis. For sites that are master metered, where the site owner may be paying the utilities instead of the individual units directly, it's going to be a requirement of the program, or what is currently proposed anyways, is that 20% of the tariff will be set aside for an immediate energy related improvement to the facility. Master metered program rules are not yet finalized, but this is what is currently proposed. Eligible property upgrades that are included on the current list would be energy efficient windows or doors, insulation, heat pumps, adding broadband internet access, energy efficiency lighting, among other projects. So now that the program has been adjusted, we needed a vehicle to be able to implement affordable multifamily housing solar and engage the marketplace. So as I mentioned, I work for the Solar MAP program. It stands for Marketplace Assistance Program. The program has traditionally just been designed to assist municipal and state agencies in evaluating solar for their facilities. It is a no-cost technical assistance program where we work with the organizations from start to finish in terms of site identification, project evaluation, and ultimately running a competitive solicitation to secure a contractor to build those projects. The goal here being that we were receiving feedback from those organizations that they did not have the time or resources to dedicate towards evaluating solar for their facilities. Because of this recent change specific to affordable multifamily housing, we've recently expanded the MAP program to also include affordable multifamily housing projects. So we will provide that no-cost technical assistance and really provide a hand-holding process for solar development. So our typical program steps are that we will, again, get involved really from stage one in the process, completing an initial site analysis. This will include an initial desktop review where we're looking at aerial images of the site and evaluating the potential solar opportunity, whether that be a rooftop, ground mount, or carport canopy installation. Sometimes it's a combination thereof, depending on how the site is laid out. We'll then work with our technical partner, CSW, to come out and complete a technical site visit where they're going to look at the on-site electrical, evaluate site conditions, including the state of your roof. They will look at transformer sizing and all of those technical components that go into finalizing a system design and providing project economics. After project economics are reviewed, we would then look to execute a project agreement. And the last stage in our process, as I previously alluded to, would be running a competitive solicitation to secure a contractor to build a project. We do run these solicitations with a group of like projects together, as there are economies of scale in developing a portfolio as one. After that, we will submit for and look to secure both the state and federal incentives for the solar project. There are two potential options that the Green Bank offers for solar deployment. First being a lease. We call it a lease, but it is really a revenue share structure where the Connecticut Green Bank would own the solar array, would be installed on site on our dime, and then we would share in the revenue that's generated by that system with the residents of the facility, receiving a portion of that tariff, as well as the property owner retaining a portion of the tariff by participating in the program. Benefit of utilizing the lease is that there's no capital outlay required. It's an off-balance sheet approach to being able to complete the solar project, which tends to be an important factor given the capital stack of these projects. And in addition to that, because we own the system, we're also responsible for all of the ongoing operations and maintenance of the system throughout the entire contract term. In addition to the solar lease, we do also offer a solar loan option. The solar loan option, we're essentially extending financing for a property owner to own the system from day one. In doing so, They would still be required legislatively to share a portion of the state level incentive with the residents of the facility, but they would retain a higher portion of that tariff by owning the system directly, and will also be eligible to take advantage of the available tax benefits for a solar project. The way that the loan is structured is that a portion of the tariff will be set aside as repayment to the Connecticut Green Bank for their debt service on the loan. So we've chatted about the state level incentives and the recent changes here in the Connecticut programming, but there are also federal incentives that factor into these projects. As I just alluded to on the loan option, there's investment tax credits that would potentially qualify for these projects. As a result of the Inflation Reduction Act passing at the end of 2022, it stabilized the base investment tax credit value for these projects to 30% of the total project cost. There are also potential additional bonuses that a site would qualify based off of specific site characteristics or programmatic requirements specific to a low-income residential project. We will ultimately evaluate whether or not a site will qualify for these potential investment tax credit bonuses. And if so, it gets factored into the project economics when we provide the financial modeling for the project. Additionally, there are other sources of federal funding that have been submitted for by the Connecticut Green Bank that could potentially impact project economics over time. One example, which is the Climate Pollution Reduction Grant, or CPRG, which the Connecticut Green Bank partnered with the COG's coalition to submit for recently. If awarded, the Climate Pollution Reduction Grant funding would ultimately be used to address barriers to completing a solar project for housing authority properties and municipally owned low-income properties. Barriers typically include roof replacement or restoration, structural upgrades, interconnection, or electrical upgrades for a project. And this project, if the funds are awarded, would ultimately be implemented through our Solar Map program, which is what we're talking about today. In addition, the Connecticut Green Bank recently partnered with the Coalition for Green Capital for the National Clean Energy Investment Fund, or NCIF. You may have recently seen this in the news, but there were 3 applications that were selected. Coalition for Green Capital was one of the awardees, with $5 billion total being awarded. And the Connecticut Green Bank is a sub-awardee that will benefit from that funding. Lastly, we've also recently submitted for the Solar for All application. We'll not hear back until late April, so really any day now. But if awarded, the funding will ultimately be used to reduce our cost of capital for these projects, which in turn would provide a greater financial benefit to property owners and tenants alike for affordable multifamily housing projects. Thought it might be helpful to give you some examples of sample projects that we've been working on here in the state. On the screen is a project that's sized at 294 kilowatts DC. We've modeled the project to show the economics, assuming a 30% investment tax credit and also a 50% investment tax credit for this site, as it qualified for a potential bonus investment tax credit. All in, the cumulative benefit in a 30% investment tax credit scenario was $960,200, with the year 1 financial benefit to the property owner totaling just under $25,000. The year 1 financial benefit to the residents of the facility totaling just over $26,000. You'll see that that financial benefit will jump if we're able to secure that bonus investment tax credit for the project, with the cumulative benefit increasing to $1,278,580 over the term. And there's an equal split in this scenario between the property owner as well as the residents of the facility, totaling just under $34,000 in year 1. In addition to the financial benefit, there are obviously environmental benefits associated with these projects. The example that I just ran through will reduce 254 metric tons of carbon dioxide each year that the solar system is online. The equivalency there is just over 4,100 tree seedlings being grown for 10 years, or over 650,000 miles driven by an average passenger gasoline-powered vehicle. Another example, 223 kilowatt system size, again, modeled at a 30% and 50% investment tax credit scenario. Cumulative benefit to the property owner and the residents totals $867,568, with the breakdown year one of just over $27,000 for the property owner, and the resident share of that revenue totaling $18,765 in year one. We're able to secure the investment tax credit bonus for the project. The cumulative benefit to the property would be over $1,050,000 over the term, with an equal split in year one, totaling just under $28,000 for the property owner as well as the residents of the facility. Again, give you an idea of the environmental benefits, the metric tons that would be reduced each year by having solar on site in this example is 180 metric tons of carbon dioxide. And then the last example that I just wanted to share outlines the financial benefit of utilizing solar and solar plus storage. We can integrate storage as part of these projects, and it would be a no capital outlay project. So we would incorporate the cost of the battery into the solar project. You will see that it will reduce the financial benefit of the project in doing so, but it gives the property the benefit of resiliency by having battery storage installed on site. So feasible option to consider if there's ultimately interest in that project. So factors that impact project economics, a number of factors really, but roof size, building and meter configuration, exposure to the sun, how much energy is consumed across all units of common area meters is ultimately going to be a driver of the system size that we can install on site. Sometimes we're limited beyond that to the square footage or available space of the facility. Potential investment tax credit bonuses that we might be able to submit for and secure for the project. And then building type is going to be a large driver of economics for these projects. So are we looking at a high rise where we might have to bring in a crane and that's added cost? Is it a garden style installation where we're going to be trenching across the campus? All of those factors will get ultimately budgeted on a project, but they could potentially have an impact to the financial benefit. So we have to look at each site on a case-by-case basis when evaluating what sites are going to make sense. Number of units will ultimately impact the financial credit that is virtually allocated to the residence facility or residence utility bill on a monthly basis. Whether or not we're including battery storage, as we just saw in the previous example, the benefit of adding battery storage to a project is the added benefit of resiliency to the facility, but it does reduce the financial benefit by adding it to the project. Then other items to consider that we would ultimately identify through our evaluation would be interconnection upgrades that may be potentially required for the project, structural upgrades, or roof repair or replacement as part of the project. On the screen is a sample project sample project schedule, which gives you a high-level overview of the steps that occur post-contract execution and once we secure a contractor to build the project. In this particular example, you can see that it's under a year of development, but typically you're probably looking at about 8 to 12 months of development timeframe for most of these projects. And what you'll see is that includes structural and electrical engineering, submitting for interconnection approval with the utility company, procuring materials, going through building and electrical permitting locally, and then ultimately constructing and closing out that system after construction is complete. Our process in a nutshell, as I've previously described with our contractor network, would be to finalize the project design and scope, develop and issue an RFP, which outlines the scope of work and eligibility criteria for a project. Once we solicit responses to that RFP, we would evaluate those responses and ultimately select an EPC contractor to build the portfolio. That will require a contract review process. We then initiate project development and again, kick off those milestones that we just reviewed on the previous slide. We do have a contractor network that ultimately would receive an invitation to participate in the solicitation to secure a contractor to build these projects. Number of contractors throughout the state that the Green Bank currently works with throughout our various programs that we offer. Worth noting, we have worked with a number of housing authorities in the past. On the screen is an example for the East Windsor Housing Authority, which is a case study from 2021. This was developed under a previous program called a power purchase agreement. The financial benefit of that project you can see is about $130,000 over the contract term. We are now offering through this new program, because the incentives are substantially more lucrative, you can see that the financial benefit of developing these projects through our solar lease or loan option is vastly greater than it has been in years past. Lastly, I just wanted to end with an open invitation. I think you all probably received an email inviting you to an upcoming workshop that the Green Bank has coming up for affordable multifamily housing. It's going to take place next week, April 24th at the Lyceum here in Hartford. And this is a event that's going to be co-hosted with Partnership for Strong Communities. So would welcome you all to attend if your schedules permit. We are looking for participation. And from there, I'll open it up to questions.
All right, thanks, Katie. That was it's the skies are brightening, it feels like.
Yes.
Very forward-looking. So yeah, open it up to questions, starting with Kathy Dorgan. Go ahead, Kathy.
Yeah, first of all, what a great presentation. What a thoughtful program. I'm really excited about this and probably as learn more, I'll have more questions, but I'm interested in a couple of things about what you presented. The first is, pairing with the bonus solar credits. We just received those credits for one of our projects, and we worked on the application. It was interesting to do, but it seems very hard to know whether you're going to have those credits just because of the timing when you apply. So is it possible to apply, have the program, and then add those on for a larger project if they're received in the next, group of credits?
Yeah, so you have to have an executed contract in place to be able to submit for the bonus investment tax credits for the project. They are transferable. So if you don't know if you're going to own a system and are evaluating a lease and trying to determine your options, the investment tax credit bonuses that you are applying for could potentially be transferred to whoever the ultimate system owner is. But you would have to have an executed solar contract in place before you're able to ultimately submit for those bonuses.
Yeah. Yeah, that's my understanding also. Thank you. And so in connection with that, or thinking about the program, the opportunity now to take the credits directly instead of through an investor is, obviously a spectacularly good thing. what's always been fantastic about the Green Bank programs is it's, you know, provided you a pathway to an investor. Is there a pathway now that's a loan program without the investor part of the deal?
Meaning direct ownership instead of participating in a third-party ownership program like the lease that I described? Is that your question? Yes. So there is. So we would offer a loan option where we would extend financing for the program. So if you're anticipating receiving those investment tax credits for the project, as well as the state level incentives, but need financing to be able to purchase the system and have it installed, that is an option that's offered through our program.
Awesome. And can that loan go to either the installer or the owner, or?
The loan would go through the owner of the system. But it would, go ahead.
Oh, go ahead. I mean, you've mentioned that you're working on additional resources to bring down the cost of that financing, but what is it now and what might it be with more incentives?
So the current program is an 18-year loan term at 5.85% interest. And I alluded to it in the presentation, but the repayment of that loan would ultimately be made through assigning the Connecticut Green Bank as a tariff payment beneficiary. So we would receive a portion of that state level tariff, which allows us to repay the debt service back to the Green Bank without actually having to cut us a check on multiple times throughout the year as repayment on that debt service. So it's kind of simplified the process, but it's 18-year loan term at 5.85% interest.
Thank you so much.
My pleasure.
Great. Do we have other questions? Steve Hall, I notice you've unmuted. Do you want to ask a question?
I don't really think I absorbed enough to answer, to ask a good question, but I am working with some developers doing multifamily projects, rather large projects. And I suppose that we should touch base with you at the Green Bank to see how you might help us out there.
Yes, please. You can reach out to me directly. My email and phone number are on the screen. I welcome a conversation to learn more about it.
Okay, terrific. Thank you.
My pleasure.
Okay, anybody else? I have a couple of questions, but we'll defer to the participants. Okay, in the beginning, Katie, when you were talking about the professional services that you provide as part of this whole program, how does that actually work in terms of Steve, you know, a developer who's got a project and you've got a design team, maybe Kathy's been hired to work with, you know, and they're beginning to build out et cetera, et cetera. When do you come in? Are they still in schematic design? Is it property acquisition? When can you be called upon to help? And maybe how does that unpack over the course of the project?
Yeah, so I would say really at any stage in the project, we're happy to become involved. If it's a new construction project, I would say the earlier the better, because we can provide some direct guidance in terms of sizing of the system, where modules would be located, what structural engineering requirements we have, and if there's components that can be built into the facility design, such as location of a conduit that we're going to require as part of our install process. We can provide that guidance up front. We've also received feedback from different projects that we're working on that it's helpful to understand the project economics up front so they know what additional income is going to be coming into the facility. So I would say new construction as early as possible. We welcome it. For an existing facility, really the only consideration there in terms of timing would be age of the roof if we're planning on locating modules on the roof itself. So if it's an older facility that knows you're going to require roof replacement within the next couple of years, we would want to understand capital assessment for the facility and when a re-roof is being planned. We wouldn't necessarily want to begin development on a project and install and then have to remove modules, 2 years down the road. financially isn't going to make sense to do so.
Okay, and then further to that, then if you could get involved on this would be on new construction, you can sort of begin collectively to optimize the design for solar. I think some of the photographs that you showed in blue where the modules were, and that was determined by solar angle and solar percentage that you could get from those orientations. So it becomes an interesting dynamic, right? If you're designing for optimizing roof or maybe optimizing landscape, and that becomes a discussion with the design team and the developer, I guess, early on, sort of. I guess you could say that would enrich the process, but I'll leave it to the designers out there to chime in which way they think. But but it has the potential to. It could also change roof materials, right? If you had solar modules that are much easier to install and much less intrusive in a metal roof, then it becomes an interesting dynamic as the design process develops over the course of the development and the build out. So I don't know, have you worked on new projects where that's been an issue, or have you been mostly existing so far?
I'd say it's been a good mix of newer construction as well as existing facilities. We just launched this program in January, so
okay.
the newer construction, projects that we're receiving inquiries for are a bit further along in the process in terms of finalizing capital and being more solar ready than not. But as you stated, there's benefits of getting involved pretty early in the process and being able to provide some feedback on design criteria.
Okay. Again, anybody out there has a question, just raise your hand or even jump in. I did have another one in terms of the lease process where you own the array and it's on an owner's building on their roof.
Yes.
How does that actually work in terms? I get when everything's going fine, it's great, but lightning strikes or tree falls down or whatever, the roof structure is damaged or the roof has to be repaired. Because the owner still owns the roof, right? And you're leasing the roof from them, yeah? And then returning benefits back to them?
Yes. So the solar system itself would be insured by the owner of the system, which would be the Connecticut Green Bank. So if there were damage that to our system that we own, it would be covered through our insurance policy.
And the interaction between it and the roof, which the owner or the developer owns,
it obviously have to be evaluated on a case-by-case basis to see what the source of the damage was and what insurance policy would be covering it.
Okay. I think, let me see what else. Oh, and when you were talking about an existing view, there was a potential that had a program to do structural upgrades to a roof in order to allow it to support solar. Is what I think I heard you say. That's because like in weatherization, a bunch of other types of programs that are running, when you have structural issues, it's really difficult to get them fixed. They typically move on because it doesn't pencil correctly for the program that they're in. Could you just unpack a little bit how that would work? This would be for existing, but if you have to do a restoration or replacement, that can be rolled into a loan or a cost of the program?
Yeah, so what we're looking to do, this is through the climate pollution reduction grant that we applied for jointly with the Coalition of Governments here in Connecticut. If awarded, and we have not yet heard back on the application, but if awarded, we would ultimately look to utilize the funds to address barriers to solar. See it, you really hit on it. Structural engineering is one of the main barriers that comes up, where you're looking at solar for an existing facility and there might not be proper loading to be able to support installation of solar on the roof, for example. So in those scenarios, most projects, you just say, hey, you didn't pass structural, and you shake hands and walk away at that point. But if there's a possibility to utilize these funds to re-engineer the facility and factor in those structural upgrades, that's ultimately what we would be looking to utilize the funds for. So as you can imagine, it is costly and it's cost prohibitive in most instances, which is why projects typically tend to die at that stage if they don't pass structural. But this is an opportunity to be able to capture a portion of that market that's interested in projects, but structurally can't
Yeah,
can't
that's,
not proceed.
it's in weatherization in Jersey, it's Comfort Partners. Those programs run into this issue. That they're structured, they just can't get around them. They don't, the funding won't compensate enough for those problems. But it's always
Yeah.
good to have some kind of mechanism to do that if you can preserve. So I had another question about storage. So you're talking about integrating storage. What is your assumption about what that storage will be? Because it's evolving so quickly now in term, well, it's actually kind of slowly, but it's evolving. You know, and when, you know, it can change over time. So you have picked some things that are possible now. What are they, and how does that fold into the project?
Yeah, so we're just starting to look at it for affordable multifamily housing projects. The way that we think it's going to make the most sense is tying into a common area meter only for a facility, instead of looking at multiple batteries to tie in and cover the load for multiple meters across a
Yeah.
facility. Financially, it's probably the best way to look at these projects, and would be the easiest way to approach it. So that's how it's currently being contemplated. Again, we're just kind of working through that initial round of interest, given when we launched our program.
And the systems that are installed and the benefits that were projected in those couple of tables that you had, what was the assumption about is it for the life of the system? That would be like 50 years or 15 years, or what were the numbers you were using there?
Yeah, so the numbers were all based off of a 20-year contract term.
Okay.
And that is the standard term that we would use for all of our projects, as it's the length of the revenue contract that we would be securing with the utility company. So that state level tariff is a 20-year contract.
20-year. Okay. All right. Perfect. I think that's all I had jotted down that I wanted to have clarification on. Anybody else in the audience? Last chance for people to pick Katie's brain about this kind of exciting new project in the solar world. Going once, going twice. Okay, last chance.
I'll jump in. So again, Katie, this is such a great program, and I'm just seeing it now and absorbing it a little. But it seems to me that in addition to all the increased benefits under the RES program and under the federal tax credits, one of the big advantages is in doing the underwriting is that you're underwriting directly against the solar income without having to look at the whole project finances. Is that correct?
That's correct.
So that, I mean, I think lots of people have looked at solar before, and in the end, it wasn't that it didn't pencil out. It was that because of the way tax credits are done in these single purpose entities, and the way the financing is designed to basically collapse at year 15, they didn't meet Green Bank criteria. But as I understand what you shared, all of that goes away. And so like our municipal programs, the underwriting become, and the underwriting and the effort involved in that, it seems to me is going to be so much easier. Is that right?
It is, yes. We've lightened the lift to be able to complete these projects. It should be a world easier to be able to complete them, just based off of the way that we've restructured everything.
That's cool.
And it should allow you to be developing a highly energy efficient development as part of the financing of the development, and this layers in. So you get the best of both worlds. Yeah, it's really great. I think it's very cool.
I know SEMA, I'm sorry. I know SEMA has been looking really carefully at solar benefits and how they interface with the CHAFA portfolio. And I wondered if there might be something you wanted to add.
First of all, thank you, Kathy. And Katie, it was a beautiful presentation. Yes, we are partnering very closely with other state entities as we are developing the RES program. Then there are, the Solar for All. We are expecting to hear something come Monday or, sometime soon. There again, we are partnering with DEEP and Connecticut Green Bank, and CHFA are co-applicants for that. So we would be able to offer, competitive, some special financing for under that Solar for All competition once the awards are announced. Anything else, Kathy, you wanted me to mention, cover?
Well, it might, I don't know if everybody online is familiar with the RRES program and how it works. So, if you could just have in a sentence or two, because I think it just changes the whole world here, right?
Correct. Yes, I think it changes because I think the biggest obstacle that we've seen is the upfront capital. That was the biggest obstacle. And now we have resources to cover for that investment. And having affordable housing in the RRES program, the tariff is higher than the RRES Tier 1 list. That simplifies the process so much for any of the projects that, go through CHAFA, DOH, hard we update that list on a quarterly basis. So then it becomes really simple. We'd be able to, finance solars. It can be financed through Green Bank, through, there's so many options. And you would still qualify for the RRES program. I think it changes the landscape completely. So we are hoping to see a lot of deployment, and we are working very closely with Green Bank. It's so helpful. Anything you want to send for a desk review, send it across to Green Bank, and they turn it around in a couple days. So it's really good in that ways. If Katie has a project, it's a LIHTC project, she'll quickly email, "Oh, Seema, is it on your list, or when are you putting it on the list?" Yeah, the moment it, we know it's going to be financed or it will receive LIHTC, we are able to add it onto the list. So I think everyone's working very closely, and a lot of other states don't have that. So people are pretty jealous of Connecticut when I tell them that, oh, we are working very closely. I mean, whether it be DEEP, PURA, we are able to raise concerns and find solutions.
Yeah, and that really has been appreciated because, you're really kind of fighting against, how hard it is to do these deals, and one more piece of paperwork or whatever seems hard, but it does a lot. The other thing, which was presented very clearly, but I'm just going to ask to emphasize, is that this provides benefits to the residents of the project. And so, even though we're doing affordable housing, sometimes we're all stunned by how high the rents are and how hard it is to pay even the limited rents. And this really can be part of what solves that issue. And so it's worth doing for that alone, I think, although of course the climate and energy benefits are important. It's really good. And thank you, Seema.
And I also wanted to mention the master metered. We are working on the properties that have master metered as part of the RRES program, as Katie mentioned. And we've got a lot of good feedback from folks that we were able to put into the docket, put into our communication, taking it up to PURA, having all those benefits in there, because there are no direct monetary benefits that we can pass on to the tenants because it is a master metered and they're not paying anything, but having, things like heat pumps, energy efficiency, having broadband, all of that get paid for through these. I think it just makes things simpler, easier, and more sustainability for this affordable multifamily housing sector. I'm super excited.
Thank you.
Yeah, thank you.
Thanks, Seema. Well, I think we're all kind of, I'm excited about this. This sounds like a great direction, and it's all sounds like a great synergistic sort of path forward. So it's terrific. Well, then, yeah, thanks, Katie, Shelton, for a great presentation, very inspiring. And, it was a great presentation, but more important, it's a great program. So thanks for pulling together a great program. I hope really good things come out of it. And with that, I think we'll close for today with our session saying thank you, Katie. Clap, clap,
Thank
clap.
you.
Terrific. And hopefully we'll all keep in touch with you over time. And everybody else including you, Katie, watch out for the announcement of our next presentation, which will be a month from now. They're the third Friday of every month, 10 months out of the year. So we've got a couple more coming up before the end of the fiscal, and hope you can join us, and people on your staff can as necessary. So wait, one more. Oh, that's a hand clap from Kathy. Yeah, a good hand clap. Good emoji. We like those. Okay, thanks everybody. Kathy, did you get the message from Vicky to maybe stay on for a few minutes, and Susan after this?
Yep.
Is that okay? Okay. All right. Thanks
Thank you
everybody.
so much, Katie. It was
Have
great.
good rest of Aprils and early Mays.
Thank you.
Enjoy the
Thank you,
spring.
Katie.
Thanks all. Bye.